February 27th. Just 20 days left, and right now, COMEX is facing one of the most uncomfortable situations in its history. Nearly 400 million ounces of silver are standing for delivery, while only about 103 million ounces are actually available. Let that sink in for a moment. This is not a rumor, not a theory, not social media noise. This is hard data. And if this pressure continues to build, the silver market could be heading toward a moment that investors will talk about for years. Stay with me, because what's coming next could completely change how you see silver, paper markets, and physical supply. Before we go deeper, if you value clear, no-nonsense analysis like this, take 1 second to like the video and subscribe to Prime Finance Hub. It helps the channel grow and ensures you don't miss what could be one of the most important silver stories of this decade. Now, let's slow this down and understand what's really happening. COMEX is supposed to be a place where futures contracts are settled smoothly, where buyers and sellers roll contracts forward, and physical delivery is the exception, not the rule. Most of the time, this system works because only a small percentage of traders actually ask for real metal. But February is different. This time, an unusually large number of contracts are standing for delivery, and the numbers are massive. Around 400 million ounces are being demanded, while registered silver, the metal actually ready to be delivered, sits near 103 million ounces. That gap is not small. It's not comfortable, and it's definitely not normal. Here's why this matters. Silver is not just an investment metal anymore. It's an industrial metal. It's used in solar panels, electric vehicles, medical equipment, and advanced electronics. Industrial demand has been quietly draining physical supply for years, while paper markets kept telling everyone that silver was abundant. Now, suddenly, the physical side is speaking louder than the paper promises. When too many people ask for real metal at the same time, the system gets exposed, and that's exactly what February 27th is testing. Think of it like this. Imagine a bank where everyone believes their money is safe. As long as only a few people withdraw cash at once, everything looks fine. But if too many people show up at the same time asking for real cash, the illusion breaks. COMEX works in a similar way. Futures contracts are fine until physical delivery demand spikes. And right now, the spike is impossible to ignore. What makes this even more intense is the timing. There are only 20 days left. That's not a lot of time to source hundreds of millions of ounces from a market that is already tight. Mining supply isn't flexible. You can't just turn on a switch and produce silver overnight. Recycling takes time. Large bars are not sitting around waiting to be moved. So the pressure builds with every passing day. Some people will say, don't worry, contracts will be settled in cash. And yes, that has happened before. But cash settlement itself sends a powerful message. It tells the market that physical silver is harder to get than the paper price suggests. And once that realization spreads, confidence in paper pricing starts to crack. That's when volatility enters the room. This is why smart money watches delivery months closely. They don't just look at price charts. They watch inventory levels, registered silver, and open interest. Right now, all those signals are flashing at the same time. And history shows us that when physical stress appears in silver, price moves don't come slowly. They come suddenly. If you're finding this breakdown useful so far, hit that like button now. It tells the algorithm this content matters and helps Prime Finance Hub bring you more real market insights instead of hype. Now let's talk psychology, because markets are driven by fear and confidence. For years, silver investors have been told that shortages are exaggerated, that supply is fine, and that paper contracts are just as good as metal. But numbers like these change psychology. When investors see 400 million ounces demanded and only 100 million available, they start asking uncomfortable questions. What if I actually need delivery? What if everyone else wants it too? That shift in mindset alone can change behavior, and behavior is what moves markets. Another key point is that global trust in financial systems is already fragile. Inflation, debt, currency, devaluation, and geopolitical tension have pushed people toward hard assets again. Gold has already made headlines, but silver often follows quietly, then suddenly catches up in a powerful way. If COMEX struggles to manage this delivery cycle smoothly, silver could step into the spotlight very fast. This is not about predicting a specific price tomorrow. It's about understanding structure. When structure weakens, price eventually responds. And February 27th is shaping up to be a stress test that the silver market cannot sadly ignore. As we get closer to the end of this cycle, watch the data, not the headlines. Watch registered inventory. Watch delivery notices. Watch how many contracts actually settle physically. These details tell the real story long before price reacts. This is exactly the kind of deep market signal we focus on here at Prime Finance Hub, because long-term winners are built on understanding, not emotion. Now, I want to hear from you. Do you think COMEX can handle this delivery pressure without a shakeup, or do you believe we're approaching a turning point for silver? Drop your thoughts in the comments below. I read them, and your perspective helps shape future videos. And if you know someone who's watching silver right now, share this video with them. These are the kinds of conversations that matter before the crowd catches on, whatever happens next. One thing is clear. The gap between paper silver and physical silver is no longer invisible. With 20 days left and delivery demands far exceeding available supply, the countdown has already begun. Stay alert, stay informed, and stay connected with Prime Finance Hub, because moments like this don't come often, but when they do, they can redefine the entire market.